Welcome everybody. This is the Thursday evening Viper trading webinar. If you're here to learn to trade the futures markets using the Viper tools, you are absolutely in the right place. First, we've got to get through our standard disclaimer, and it goes as follows. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Alrighty then, with that out of the way, let's get over to some charts, which of course is the reason everybody is here. Tonight's topic is trends and ranges and how to trade them. So what we're going to do, our approach here tonight is, Weldon says he lost me. Not sure what that means. Let me make sure I'm on screen one here. All right, you should see an ES chart here, December ES chart, 2 range, cursor moving in the middle of the screen, and hear my audio. Everybody hear that? Everybody cool? Cursor, ES chart, audio check. Yes? All right, something must have happened in transition to this screen here, but I think we're all good. So we will proceed. We will proceed. So what I want to do is I'm going to start, kind of like building a good structure, whether it's a house or a building or whatever. You have to start with a foundation, which are the basics, and then you build from there, right? You build from there. So how do we know? Well, let me first explain what you're looking at. Some of you might be here literally for the first time, so let's start with that. Viper Trading Systems, we've been in business about 10 years. We trade intraday volatility of futures markets. And so more specifically, we have a live room, most of you know, of course, and in that room we show crude oil, CL. My business partner, Gary, trades that pretty actively. Most of you know that. We're getting ready to roll to the December contract tomorrow. Right now we're on the November. We're going to flip it tomorrow. So futures in that way, they're not like options in the fact that it has all the Greeks and time decay and all that sort of stuff. However, they are tied to monthly or quarterly expirations. So for instance, you can see the chart you have right here, this E-mini S&P chart is the December contract. So what happens is when that expiration comes up, you roll it to March. So you're always rolling 3 months ahead, okay? And then, of course, in the room, we also trade the Russell, the RTY, also December contract. That's $5 a tick. ES is $12.50 per tick of movement. Crude oil, CL, is $10 a tick. And, of course, we trade GC gold futures, which is also $10 per tick of movement. We are connected to a data feed, rhythmic data feed, to our broker Ninja. And that sends the data in, which produces the 4-range candles that you see right here. Now, we normally trade 4-range. If you come into our live room, you will always see 4-range charts. We haven't changed that in many, many years. However, on ES, since the movement can be fairly condensed, let's just use that word, smaller and condensed than bigger movers like NASDAQ and Russell, I use a 2. It's a little quicker. Gives you a little more detail around where you want to get in and out, and so I like it too. You can trade a 4 if you want, it's perfectly fine. The entries setups are all the same, none of that changes. And then, of course, you have the background colors on here. In a downtrend, the background will be red. Generally speaking, in an uptrend, the background will be green. We have the bar colors, of course, blue, yellow, and red. We have the power meters, which at any given point in the live trading will show the trends, power trends on the chart. We have the predictors. There are the swing levels in real time. We have the object trader alerts, which depending on whether you're an uptrend or a downtrend, you will toggle the long alerts on or the short alerts. Short in a downtrend, long in an uptrend, of course, right? Okay. All right. Now the topic today, as you recall, is trends and ranges. And most importantly, of course, is being able to spot them very quickly and then how to trade them. So spotting ranges, spotting trends, and then determining how and where to trade them. So with that being said, let's start off with trying to just see if we can identify when we're trending and when we're ranging. Let's start with right here in the middle of the chart. From, let's put some lines here. Let's say from, oh, I don't know, about here to, let's say over here. Now, if you think this is trending T, type in a T, if this is trending between these two lines, or is it range-bound R? Whatever you think it is, type in a T for a trend, R for ranging. T for trending, R for ranging. Just type in a letter, whatever you think it is. I'll give you 5 seconds. Okay, 4 seconds. Two seconds. So between these two lines is this market, ES, 1 second left, T for trending, R for ranging. By the way, to the extent you participate in these, you're going to find that you will learn this material much more quickly. It's like anything you do. It's, it's muscle memory. It's learning. Trading's the same way. It's no different. When you participate and you engage yourself, you'll learn a lot quicker. All right, time's up. I do have a slow clock. When I say 5 seconds, technically I'm probably giving you more than 10, but that's to sort of motivate everybody to get an answer in, as opposed to an open-ended question that just sort of sits there. Yeah, you are range bound here. And the way we know that is that ranges are as follows. They have very similar or close by swing highs and swing lows. So in this case right here, we can see support was pretty much down in this area right here, around 2986-ish area. And there was clearly resistance up here, oh, I don't know, 92-ish area. By the way, a word on ranges and support and resistance, okay? A healthy way to think of this, and I used to say this all the time, but it bears worth repeating. Think of a support and resistance place, if you will, on your chart as an area. Okay, it's an area. You can see that sometimes you're going to go a little bit above it, and sometimes you're going to go a little bit below it. It's just we put a line there to have a referral point. But in actuality, in fact, some markets are better at this than others. Like ES, for instance, tends to really respect support and resistance levels. Swing highs, swing lows. It'll come very close to those, and then it'll touch them again. That's what I like about ES, right? Very predictable in that way. Now, bonus question. If you were going to trade this area right here, would you be taking shorts at resistance, so S for shorting the range, as your primary mode of entry? Would you be buying it, B for buy, as your primary mode of entry? Or would you trade both sides? So type in both. S for short, you're mainly shorting resistance levels, covering at support, right? B for buy, you're buying the bottom. When it comes down to the bottom, you're buying down here, and you're getting out at the top of the range. Or BOTH, both. You would trade both sides of this range. This is a bonus question, 5 seconds on the clock. S for short, B for buy, both, the word both for both. 4 seconds. I'll be more strict on the clock and try to get everybody motivated to participate. Anticipate to participate. We used to have a saying like that, remember? Anticipate to participate. 2 seconds. S, B, or both. We're going to move on from here. We're going to start looking at all kind of manner of other things here. All right? 1 second. Time's up. Now, in my opinion, and first of all, I should give you sort of a caveat on the ranges here, so we're all kind of on the same page. our minimum criteria for tradability on ranges is 20 to 25 ticks. First, let's examine the size of this range. We said support was around 86-ish. And we can see that the resistance is, or support is at 86, and resistance is up here around 92. That's plus or minus about 6 points. So how many ticks is this range? If I told you that ES, this range was 6 points. Everybody remember how many ticks per point there were? How many ticks is this range, and is it is the size tradability okay? Well, 6 points times how many ticks per point? What did we say at the beginning of the webinar? Some of you might have missed it. 6 times 4. Yeah, 24 ticks. So we said 20 to 25 ticks, so you're right in the sweet spot there. So the answer is yes, this is a tradable range. Now, if you look at the background here, you can see that the background is red, right? And the bars are predominantly red. And while you are range bound, you are said to be sideways to down. So when somebody says sideways to down, that implies that your primary mode of entry is shorting. You're shorting this range. Now, since it is 24 ticks and tradable, you not only are looking to cover down here, but some of you said both. Now, the only way I would suggest that you could trade both sides of this market is if you were very, very good at range-bound trading. If you say something like, look, Charles, I've traded ranges for years. You know, I see the range real clearly when it sets up. I'm comfortable shorting. I can cover my shorts down here, no problem. And sometimes I'll go ahead and I'll flip it and I'll take 24 ticks on the way back up. Then totally good for you. Are we losing sound? Anybody? Sound check? Somebody's saying that we're losing sound. Is that correct? Testing audio. I don't know what's going on here. Everybody says we're good. Dave, if you can hear me, if anybody has a sound issue or an audio visual issue, whatever, just all you got to do is just log out and log right back in. Okay, just log out and log right back in. It might be something on your end. All right, so everybody, we get the range. Okay, we get the range. Let's move on. Let's look at something going on here. Let me take a peek at something here. Okay, let's see here. How about this one right here? We'll do like one or two more on ES, and then we'll start looking at other instruments, and we'll start talking more about trade entries. Okay, all right. How about here? How about here? Let's go ahead and put a line here. Okay, and let's put a line. No, I don't know. Over here somewhere. Okay, all right. Okay, so between these two lines, are we said to be trending T or ranging R? Trending T, ranging R. 5 seconds on the clock. What is your call team in this area here? Three seconds. T or an R. Boop. That's all you got to do is hit a letter and cast your vote, one way or the other. Boop. Just like that. 1 second. Time's up. Good. Good. Everybody got that. Yes. And some of you actually put in trend down, trending down. Good. Good, good. All you said T, which is correct. We are trending, and of course the trend is down. So characteristics of a downtrend, most of you know, of course, I'll state the obvious, is that you're getting a series of lower highs and lower lows. Now what happens here is in the beginning parts of a trend is in the case of a downtrend, it starts with a thrust. Of course, this would be down. When a market's heading down and selling off, the initial thrust is down. And then you go into a series of what are called retracements or pullbacks. In the case of a downtrend, a retracement or pullback would be in the opposite direction or up. Now, pop quiz on number 2 for trading a downtrend. On retracements, are we selling short S or B buying for our primary mode of entry in a downtrend? Are we selling short or B buying? Are we selling resistance, or are we buying support? Buying support levels all the way down. We're buying support levels. Or at resistance, are we selling short? S. Selling short, selling short, selling short. What's our primary mode of entry on a downtrend? S for selling, B for buying. Cast your vote, team. 4 seconds left on the clock. Simple question in a downtrend. How do you trade it? 2 seconds. Time's up. Good. Selling, S. Correct. Good. Good, good, good. Yes. So in a series of lower highs and lower lows, you will notice that the bars are predominantly red. Yes? When it starts to really kick in the beginning part, and you can see there was a little bit of a range here, but you can see that we were starting to put in a series of lower highs and lower lows. You can see, you can go, sort of in your mind, actually draw a little sort of downtrending line. It might look something like that, right? The background turns red. The mid-band turns red, and all the bars or bands and the mid-band start to stair-step down like such. Now, how do we trade that? Everybody in here said selling short, and that was correct. So let's take this away. You are not buying here. You are buying to cover where you are shorting. Let's talk a little bit about trade entry and sort of eke that into the equation here. Now, when the market is selling off, you are looking for pullbacks, and we really like one of the best trades to learn. We have lots of different trades, but if you're sort of starting to learn the system, the mid-band area is a good place to start. Okay? And the reason for that, and I'll just explain the sort of the logic behind it. If you notice, if you were to measure between the outermost bands here, line 6, or no, I'm sorry, I get this reverse. It's 1, 2, 3, 4, mid-band, 5, 6, 7, 8. And so the red line is line 2 because it's right above band 2, right? And the thin green line is line 6 because it's above band 6, right? So we use this very prominently in our trading. What that means is that in the case of selling short in this area right here, your initial goal is to have the market get at least back to the swing it had established, which would be here. And then we want to see a continuation to lower levels, which you got right here. Okay? Everybody see that? Much lower highs, much lower lows. So we're entering, and technically speaking, and I'm just going to speak to this because I'm focused more on trending and ranging. I'll speak more directly towards mid-band entries. I'll talk a little bit about minimum criteria entries and deep phantom retracements, but I'm going to focus mostly on mid-band trades. And so the way that works is this. From a shorting perspective, if you're anywhere in the band above or below, directly above or below the mid-band, this is said to be a mid-band trade. So pop quiz, having just learned that, these bars right here, do they qualify as a mid-band trade, yes or no? I'm only going to give you 4 seconds. I'm going to start tightening up the time frame because most of you know this. I see the names of all you folks that know this stuff. And even if you're new, we're teaching you very quickly here, and you should be able to pick this up very quickly. It's a very simple trading system. It's not complicated. There's a lot of form and structure here with the bands and everything. Yes, I just said that on the band itself, which these bars are touching, right, or immediately above the mid-band or immediately below the mid-band, which these bars are in, yes, qualifies as a mid-band trade. So that's a legitimate short trade right there. It's a short entry. We'll talk about exits in a minute. You can have our traditional suggestion is to put a 2-lot on, 2 contracts. Go ahead and take a scalp off at 6 or 8 ticks, 10 ticks for the high flyers that move more. ES, you can take 6 or 8. You have an initial 2 contract stop up here, 8 or 10 ticks above your entry point, and then once you peel your scalper, you bring your runner stop down to 2 ticks behind your entry. This is the standard trade program that we teach for almost all of our trading. Okay, and then you trail the stop on the runner. You can use the stealth. You can use line 2 in the case of the short, in which case you would have been bipped out somewhere right here. So just to be clear, this trade was short from here or here, depending on your entry, where you pick to get in, right? When you start trading it, and you probably got taken out here. So what is this one trade worth? Well, let's figure it out. Let's do some round numbers. Now, the other thing you can do is you can put a 1 or 2 lot on and you can just run it. You don't have to take the scalp out. Let's use round numbers because I don't have to pull my calculator and figure it all out here. Let's say 95.50 short, and you got out here at 90.50. So that's 5. 5 points on ES is worth how many dollars? 5 points. 5 points on a short. What did we say it was worth again? Right at the beginning. Some of you came in late. It's okay if you don't know. It's totally okay if you don't know. These are things you have to learn when you trade futures, right? You got to know what the tick value is worth and the point value and all that sort of stuff, right? 5 points is $50 a point is $250 on a 1 lot. $250 on a 1 lot, less commission, right? If you had entered here short, it'd be a little more if you got in up here. It'd be an extra point probably. Yeah, it looks like it is. Another 1.5. So that'd be, closer to 300, 3.25, maybe 350. You got out done here. So 2 lot be 5 bones. 50, right? 2 lot be the 250 times 2, right? How many more short entries before we leave this downtrend? Not including these entries. Looking forward from this point forward, how many more trade entries are on this chart? Short, I'll help you. They're short. Counting shorts between here and here. How many more shorting opportunities in the downtrend occurred? We're counting shorts between here and here, 5 seconds on the clock. Just type in a number, count them up. If you think you could, if you think you see them, you think you know what they look like, just count them up and type in your number, 4 seconds. Counting shorts. Based on what you know. 3 seconds. 2 seconds. Type in a number, count them up. You got to be able to see these quickly. That's part of the trading muscle memory, right? You got to learn the system, see them, and then when they happen in real time, you can take them. And that's how you make the money, right? All right, 1 second, time's almost up. It can be any type of trade. Minimum criteria, mid-band, or deep retracement. Any type of trade. How many trades are left on this chart in that square right there? Time's up. All right. Now, I'm not going to count this. You might try to make the case that this is a minimum criteria trade because you did close above stealth and you did close above line 2 barely with the wicks of those candles. However, I'm looking at this as the exiting cover by the cover from these short entries up here. So I'm not going to count that. I understand you can make the case for it, you minimum criteria traders. I get it. And it did actually work out for a scalp, but I'm not going to count it. I'm going to count the deeper retracements for now. Now, here you got an entry, depending on how you boxed it with the object trader tool. It did come down and give you a quick little, maybe you got a scalp, maybe you didn't. Came back into the box, stayed under the swing. I'm going to count these 2 little bips up and roll as one trade. I'm not going to call that as 2 separate trades. Now, you could make the case, well, how do you know that you wouldn't have taken the trade, stopped out, maybe close to break even, and then got back in and made that trade? I understand that. I'm going to call that short 1. Okay? Here we come up again, one more time, retracement into the band underneath the mid-band right here. Short trade 2. Here we kiss We kiss the midband right here. We just wick right up to it. Perfect entry. Short trade number 3. Now, you could, and this is a borderline case, it didn't work out. You could make the case that this box entry right here, which never broke, you never got in it, would be short number 4 if you're counting it. You never got filled, and it never. So if you said 3 or 4, you were correct. Good. Each one of those looks like they made at least maybe 10, 12, a couple of them. This one probably made closer to 20 ticks. Yeah. Good. We will, Trader JFM. Yeah, no problem. Yeah, some people are having issues with the audio and the visual. And if you are, like I said, try to log out and log back in. If it's still a problem, no problem at all. This is recorded. It will render tonight, and we'll get it on the web. It'll be on our public website tomorrow morning after the room closes when Gary gets a chance to upload it, and then we'll put it in the membership area so everybody will get it. Don't worry about it. If you have an audio visual issue, no problem. Kevin, you should try to log out and log back in. You must be having... Robert K is making a suggestion. If you're having issues, try using Google Chrome. Log in with Google Chrome, and your audio will be clear. Okay? All right, good. All right, let's move on. Let's do this. Let's shift to another instrument. That's enough time on ES. What else do you want to see tonight? Let's get some other instruments in here. Let's mix it up a little bit. What do we want to see? If you were going to want the next, half an hour or so, you want to see a couple more instruments, what would they be? Go ahead and type them in. Try and squeeze as many as we can in here. Okay, we got some crude. Got some crude traders here, so we got some CL. Good. Gold, GC. Okay. NASI, NQ. Okay, sure. Yeah. High-low indicator. Okay. Support versus resistance. Sure, Giuseppe. I'll do that right now. So, support and resistance come into play. Okay, so let's do it this way. Let me do it maybe the simplest way that I can to explain it this way. And this is good for everybody, so it's a great question. Okay, so let's do it this way. When somebody says to you, there is a support swing level, and let's just use this as an example, down around 29.88 3/4, look to cover some of your shorts down there. The support level will always be below the current price. So this is called support. Okay? It will always be below the price. Support will be below the price, always. Okay? Now, resistance level is the opposite of that. So resistance level will always be above the price. So in this case, right here, we might say something to the effect of, if the market comes anywhere up near 92, 92 3/4, I would look to short that in a downtrend because that is resistance. Resistance will always be above the price. Always. Never below. Resistance is always above. Okay? So that's how that works. So in a downtrend, you are selling resistance levels. And there's a principle in place, and most of you know this, of course, that support tends to become resistance. So what does that mean? Well, a prior support area, like this area right here, can then turn into resistance. Support can turn into resistance. Resistance can turn into support. Let me see if I can show you like this. Let me use my cursor to show this. I think I was paused momentarily, so let me go back and correctly show you here. Support is always below the current price. Resistance is always above it. So if you're in here, support is here, and resistance is here. Prior support areas, like over here, tend to then become resistance areas. Right? Support areas become resistance areas. In a downtrending, you are always shorting resistance. Shorting resistance. Sometimes they're around the midband, sometimes they aren't. When you come down to support areas, you're looking to buy to cover. You're not getting long down here at support in a downtrend. you are covering your shorts and taking profits. Can everybody see that? Support and resistance. That's how that works. All right, let's go ahead and get a crude chart up here. Let me load up crudy. A lot of requests for crude and gold and NASDAQ, our SPASI. And there was a question on the high-low, open high-low indicator. I will show that in a little bit if you just hang tight. Let me give me a minute to fix this chart real quick here. I'll try to load the data on crude next. While this is loading, I'll just visually sort of quickly explain what it is. There is an indicator that comes with Ninja. It's called current day OHL, open high low. Okay. And okay, hold on. I'm loading crude. Just give me a second to load crude here. Just give me 1 minute. The data's coming in. So it's not complicated. It's very simple. You just put that on your chart, and it'll put dashes where the low of the morning is, and it'll put dashes where the high of the morning is. Okay? Let me see if I can get it on a chart here. Hold on, stand by. Look, searching indicators. Trying to find the current day open, high, low. Where is that? It's under C, CDE, current. Let me see. Where is that bugger? It comes with Ninja. You don't have to like import it or anything. There's nothing special. Nothing fancy about it. Just draw some lines. I just personally find it helpful because it's really good to know where these levels are, because a lot of times they'll check them. They will come in there and they will check these support. Those swings tend to become support and resistance levels. All right, so it looks something like this. Let me see if I can. I'm going to show you right now. I got it on here. You don't have to use this. This is something I just stumbled across. I don't know, a couple weeks ago. I found it helpful. Yeah, you just right-click on your chart, Dave, and you go into indicators, and it comes with Ninja. It comes with Ninja. It's built right in there, and it's called current day OHL, open, high, low. Okay. Now I've configured this that I've configured these dash lines to work with the colors on our charts. So, for instance, the low here. Let's look at today. Let's look at today. Today was the 17th. Let's look at how today played out. Let's see if this can help you out a little bit here. So here's midnight. This is the end of the Asian session over here. And this is the beginning of the European session. And Gary opens the live room right in here somewhere. 6 o'clock, crude pit open was here. The dashed black line is the open from way back over here. See it? The dashed blue line is the high, is the swing high. The dashed white line is the low. Now, a lot of times what you're going to find is, and this is how I use this, in conjunction with how we normally trade our system, is that a lot of times in the morning, the ES and NASDAQ do this a lot too. Can you see that overnight the swing low was right down in here? Now, if you had shorted crude from, say, a mid-band short, it came right down to it and bounced. I mean, isn't it good to like know where that is? Yeah, of course it is. That's where you're looking to cover and get out, right? Now, if you'd flipped and taken a long when you broke up here, where did the market go to? Where'd the market go to? Yeah, went right to here. Right to the swing high low and swing high and took it out, didn't it? So what I try to do is I try to find a midpoint. The midpoint normally sometimes is going to be right here where this dash line is, where the open is. It's going to be within usually a few ticks of that. Now notice that open area then becomes support, and now you're taking longs. As long as you're above it and the criteria is correct, you're taking long trades. And every one of those worked out. Long, 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 stopped out, long, huge run. Can everybody see that? Everybody see what that is? I get a lot of questions about that. You can see it's not very complicated. It's not, there's no kind of mystery about it. It's just an indicator. And don't let it confuse you, and don't let it change the system. Everything as far as the trade entries and trends and where we get in and mid-bands and boxes and all that, that's all the same. None of that changes. This is just providing you more detail on where the swings are. Okay? Now, on crude, what I'm going to do is, armed with that information, I'm going to ask a series of questions. Current, here, it's right here. It's right here. Can everybody see this? Current day OHL. It comes right bundled with Ninja. It's right in there. You don't have to do anything special to get it. Now I configured these lines. Okay, I just made them different colors, and I made them a little. The base thing has different colors, so I just made the high blue, the low white, and the starting point black dashes. Okay, you can make those whatever colors you want. You can make them as bold or as low. You can make them smaller, make them bigger, whatever visually works for you. I'm going to start doing a series of pop questions for you, and they're going to become increasingly more difficult. I'm going to start with the easy ones. Okay, everybody got that? Everybody see what we're doing with that open high-low thing? Everybody see it? All right, cool. Now I'm going to start with some questions. I'm going to sort of quiz everybody to make sure that you're, engaged here and paying attention and following along. And this is going to be on crude. On the first couple rounds of this questioning on crude and gold, which I'll do next, I'm not going to tell you, I'm going to ask you. In fact, I'm going to do it this way. Here's probably the best way for you to learn this. This would have been yesterday, and this would have been yesterday morning, actually. And I'm going to start with our little quiz right here. So I'm going to go from here, which was about a little after 6:30 a.m. Pacific yesterday. Well, this would run all the way to almost to 10:30, so you're looking at right about 4 hours. How many trades are on this chart, and what direction are they? I'll give you 10 seconds. Between this line, oopsie, sorry about that. I was getting a little crazy on me there. Between here and here, how many trades were there, and what direction were they, long or short? So you would type in, you would type in a number. I'm just going to make up a number, 50. How many trades were there, and were they L long or S short? You should know this by now, right? You've looked at a lot of charts. Counting trades. I'm not going to tell you what direction it is. You're going to have to figure that yourself. So you would say 47S, which would be 47. I'm making that up. Of course, there's not 47 trades, but 7 seconds left. Type in L if you believe that they are long trades. 5 seconds. How many trades and what type? This was yesterday morning on crude oil. These exercises are designed to help you visualize and see how and where the trade entries occur, so that when they come at you in real time, you can identify them and take them for yourself. 4 seconds. So we're looking for a number of how many trades you see, and then the direction of which you took them. L long, S short. Let me move this in line in a little bit here. Let's just call it right at 10 o'clock. Yeah, let's just call it right. Let's call it 10:03, whatever that line is right there. 2 seconds, counting trades on crude. Counting trade entries on crude. 1 second. In what direction? Okay, good. Time's up. Well, first of all, let's talk about what direction the market is moving yesterday morning on crude. Clearly, you can see that the background is green, a solid green. The bars are predominantly blue. And the mid-band and all the bands are stair-stepping up. So if you believe that this was an uptrend, you are correct. So uptrend means we buy support on retracements. So we have this notion, and let me blow it up so you can really get a good look at these entries. Let's blow it up super big, make the bars like way super big. Over here, we're kind of dinking around, so I'm not going to really count this. I'm going to start counting from about 7 o'clock. You know, could you make the case? Was there a minimum criteria long scalp here? Yes, you are correct. Yes, but I'm not going to count that. Okay. Now, I really wanted everybody to focus primarily on mid-band trades, so I'm going to start with mid-band trades. Okay. Here we have the thrust part of the move, which turned the background green, right? So we know it's an uptrend. And we pull back right here into the mid-band, and we bounce. So this is long trade entry. And by the way, if you said long only in the uptrend, you were correct. This is long trade entry number 1 right at the mid-band, textbook, right? Here we get trade entry number 2 right here. Long, 2. Here we get trade entry number 3, long, right here at the mid-band, just above it. And here we have trade entry number 4, long at the mid-band. So that's 4. Now, could you make the case that right when I put the line here, was this a long trade entry that never worked out, kind of like the other thing on ES? That's true. Technically speaking, that is a trade setup, long, but that never got filled. So, I mean, if you said 4 or 5, you are correct. There are 4 or 5 mid-band long trades, L only, on this chart. Now, for you minimum criteria retracement traders, could you make the case that this was a minimum criteria because it broke below the stealth line, the sneaky snake kind of green line, which we call stealth? Yes, check mark 1. And we close below line 2 for minimum criteria? And the answer is yes. So that is a minimum criteria. So if you said, I would count either 4, 5, or 6 long trades. Minimum criteria at 802. Yeah, this one right here. Yeah, that's cool. Yeah, I mean, if you said 4 mid-band trades, which was this one, this one, this one, and this one, and you didn't count that, that was good. If you counted this one too, which never filled, that would be 5. And if you include the minimum criteria long right here, that would be 6. Anywhere between 4 and 6 would be a correct answer in my view on crude. Good. All right, let's bip over to, before we run out of time, I got to get to gold. And there's been a couple of you that asked to see NASDAQ. So let's go ahead and load those up before we run out of time. Stand by. Before we move on, let me come back here. Is everybody clear on the entries? I don't want there to be any ambiguity about what we're doing here. When you're in an uptrend, you are really taking longs only. And, you know, I strongly urge you, as you learn the system and you're picking it up, maybe you're in an evaluation period or a combine with Top Step or with One Up Trader, or you're in a free trial with one of them and you're learning the system, just try to start learning these mid-band trades. In and around the mid-band trades tend to be money, because normally there is, between that and the swing that you're trying to get to, is at least 20 ticks right here. If you just learn those to start, just don't try to pick up too much. You know, you can try to learn all these other ones if you want. You don't want to get overload yourself and get confused, and then you're taking too many trades and you're over trading and you're not making any money. You don't want to. That's not a good way to start. Pick an instrument. Pick 2 instruments, no more than 2. That would be my suggestion. 1 or 2 instruments, and try to learn them really, really well. Give each one a week. Try crude for a week, and maybe ES. Try the Russell for a week. Mid-band trades. Try gold for a week. Well, you're going to notice that sometimes there's questions coming in regarding the fact that these bars turn yellow around the mid-band. This is not suggesting a trend change by any means. This is not a trend change. What happens is the algorithms are such that when you're very highly trending like this, in an uptrend, the bars are going to be blue. Occasionally when they get down here, they might turn yellow. Don't let that you know, we have a kind of a saying, and the saying goes that price action is king. So you want to look for the swings. You want to look for the price action. You want to look where you're going to get in. The bar color is much less relevant. I can try to get the correlations in. I'm going to try to do that. I'd have to get the gold up real quick, and then I'll have to try to get a NASDAQ chart next to an ES chart and a gold chart. I'll try to do that if I can. Sometimes I box in around the mid-band and I get taken out by phantom trades where the market goes deeper. Are you saying that you're getting filled long like this and then it reverses on you and comes deeper? Like that? Is that what you're saying? Or are you buying here at mid-bands? You're buying the mid-band, you're not boxing it. See, I like to box it. The reason I like to box it is because I want to, just by virtue of the fact that the bars are sitting right on the mid-band, does not imply that it's not going to go deeper. It can very well go deeper, and that really depends on the type of instrument you're trading. Russell and NASDAQ and NYM are prone to go much deeper. Gold can do it too. Okay? That's why I like to trade ES. It rarely does that. It rarely ever does it. And if you do get bipped into an ES trade and it reverses on you, get out very quickly and just dump it. I like to see when a market comes out of a box using the object trader tool. In my view, when this occurs, this is telling you that the buy programs and the momentum has returned to the market, and it's a good entry. Now, is it not as good as buying the mid-band itself? What he's saying is that maybe you put a limit order down here and you're getting it right at the mid-band. Yeah, sure. Now, look, you're going to be in maybe 6 or 8 ticks before I get in. No question about it. Crude oil can be prone to do that, Giuseppe. If you're getting stopped out a lot, I would suggest, and this goes true for anybody, if you have an instrument that you're struggling with, just because we trade certain instruments in the room doesn't mean that's what you have to trade. We have traders dialed in, and you've heard this before, literally from all over the world that have been trading with us a long, long time, and they trade all manner of things. 6E, currency futures, dollar index, bonds, notes, there's like 200 instruments. And they trade them at night, and they trade them in the morning. They trade them all the time. You have to find, that is your goal, is to find an instrument that speaks to you. I happen to like ES. I've been trading it for years. I know that instrument like the back of my hand. I could probably trade it blind. I mean to be jerky or cocky about anything. I'm just saying, I really know that instrument well. A mid-band trade, as we explained earlier, is on the mid-band itself or in the band directly above or below. You might have come in late and missed that. That's okay. Right there. That's a mid-band. Now, in the case of a long, you're buying retracements and bounces. Right? In the case of the short, you're buying comes in and kiss and roll. You kiss and roll short. Kiss and roll short in a downtrend, buying in a long trend. Okay? All right, good. Let's go ahead. Let's get over to Goldie. Let's try to get, and now try to squeak the correlation. It's getting a little long in the tooth. And I promised I would do that, so I've got to get through this quickly. What we might want to do is, as I load up gold, is try to load a NASDAQ and try to get them all up here. You're not going to get the detail on gold I wanted to do. And, I have to put a caveat on this, okay, truth be told. They don't always behave this way. Most times, the majority of the time, this works. But many, many times, sometimes it's not. I mean, like today, for instance. Today, the equities were going up and gold was going up. Go figure. And then they got square, and then gold sold off, and then the equities went back up. Yeah, so sometimes it's out of sync, sometimes it isn't. But we're going to look at it. Let me see if I can try. Give me 1 second here. This is going to take just a minute to try to get all this loaded up. I'm going to have to see if I can get this square away here. All right, so there's our gold chart. Just hang tight, please. Everybody keeps asking about the correlations and how they work. So while you're waiting, let me just get a gold chart up here so you can see what I'm talking about. Here's today on gold. Okay, here's today on gold, right? You can say it had a little bit of a downtrend over here towards the later part of the morning, selling off a little bit into the close. Here you went a little bit sideways for a while. You go into an uptrend, start heading up. This is later in the morning after we closed the room. 8 o'clock was right here, Pacific time. Okay. Here's gold over here. Here was the open. I think we had a long. Equity markets have been selling off, and then they rebounded off their lows, and then they started to head up. So that was a discorrelation, if you will, where gold was heading up and equities were heading up. But then you can see gold started to head down a little bit. Some days they're highly correlated. Some days they aren't. You have to trade what you see. You can't just, you just can't go and say, well, equities are going up. Gold should be selling off, and you start shorting it. And clearly gold's in an uptrend and you should be buying it. You have to, like I said, price action rules the roost, right? If the market's going up, you're buying it, irrespective of whether it's out of correlation, right? That makes sense? Okay, hang tight here. I'm going to get the other two charts up. Stand by, please. Put them right next to Goldie. And I'm going to load up another ES chart right now. And I'm going to see if I can squeak a, it's going to make the thing a little crowded, but maybe I can address all this in one shot. I'm going to try that right now. All right, I'm going to go with a 4-range ES so we don't have so many bars. And I'll try to only go back 3 days. Okay? All right. Okay, ES is loading. Stand by. Put that right next to Goldie. And then I'll tuck the NASDAQ chart to the right. Okay, ES is loaded. Now I'm going to try to do, in the past when I did the universal, the universal, what do you call it, the crosshair thing, it just messes everything up. All right, so here's ES right next to gold. All right, let me try to get the NASDAQ chart up here real quick. See if I can squeak all three. I'm going to have to really scrunch them down a little bit. We'll do our best. Unfortunately, today was not a good correlation day to use, but other days, like all this week, has been perfect. Right on, every day. We like that. We have a saying where all is right with the world. That means that things are going down and up like they should, right? Okay, do one more chart. Get Spazzy up here. Stand by. And the interest, now NASDAQ has a lot of bars, so I'm going to go 4-range still, just like in the room. There we go. And I'm only going to go 2 days, because otherwise it's going to take forever to load. There's so many bars. That's because there's so much movement on NASDAQ, right? You right click and you go to what is it, data, to change from 2 to 4 range, from 4 to 2 on ES. Here, I'll show you that 1 second. NASDAQ loading, almost there. I have to shuffle the deck here, but I'll answer your question there, Rob, real quick. Right click on the chart, go to data series, and in here you change this from 4 to 2. Okay? 4 to 2. Just put that at 2. And then it will load a 2-range chart. Everything the same, setup's all the same, diagnosing the range, the trending market, the trade entries, mid-band, everything, nothing changes. You just get twice as many bars. So when I say the term, we get more granularity, all that is a fancy way of saying we get more bars and therefore we get more detail. Sometimes when ES is moving really super slow, and you're not getting like a whole lot of movement out of it, and it's trapped in a range, but you still want to take some trades. When you put a 2 on there, you get twice as many bars. You get a lot more detail, but some people might not like that, so it's up to you. All right, I've got the gold on the left, and I'm going to try to get ES in the middle, and I'm going to try to get this all lined up. And hopefully the correlations will at least work some point. I'm going to put NASDAQ on the right. And I'm going to put ES right in the middle. Okay. It's going to be a little crowded. It's okay. All make nice together. Play in the sandbox together now. Come on, kids. All get along. I'm almost there. Stand by. All right, I'm almost there. This NASDAQ chart has like 9 gazillion bars on it. That's the only thing about Spazzy Nazi. We used to call it Spazzy Nazi, especially in the room. In fact, we had it in the room for years. And then what we found was it was like a what do you call, like a rambunctious child where you have to like pay so much attention to it. We could hardly trade anything else. Anybody remember that? Anybody remember we had NASDAQ in the room? Remember? Some of you do. All right, here we go. I'm going to speak to the correlation issue right now. Are you prepared to receive said information? Of course you are. Let me start with the NASDAQ ES correlation, because those algos that run on those instruments tends to be very similar. What you're going to find, though, is that the movement on NASDAQ is much more pronounced. In other words, it will go further and it will go retrace much deeper, and you're going to get many more bars on NASDAQ than you do on ES. But the price patterns will look very similar. Here's what I mean. Here's the open on NASDAQ to the right. In fact, in the sake of making this, let's put gold on the side just for a moment. Let's table gold just for a minute so we can blow these two charts up and start with 6:30 a.m. Pacific on ES, which is to the left right here, and 6:30 Pacific on NASDAQ. Let's get this all lined up a little bit right there like that. So when you visually look at this, you can almost immediately see, you can go with a bigger bar, Mario. I do that. I don't show that in the room. I normally don't speak to it. However, you can. What Mario says is I like to go with an 8 range. You can do a 6. It tends to calm down the movement on NASDAQ a little bit. You don't see these whippy spikes. You go to larger bars on NASDAQ, it will kind of smooth this whippiness out a little bit. Okay, they're larger bars, they're higher, more risk. Smaller bars are less risk. However, you get a smoothness that really I like a lot. I usually go with a 6 or an 8, and usually with a 2 on ES. But you can play with it yourself. The types of entries are all the same. Nothing changes as far as the trading system is concerned. But this over here at 6:30 is what ES looked like. Now you can notice that on NASDAQ it looks very similar. I'm speaking to here, and I'm speaking to here. Like that. Notice how the volatility on NASDAQ is much larger than ES. In fact, you see you spike up, you pull back, you consolidate, you come down. This can't be right. My data's got to be way off here. That can't be right. Is that right? Yeah, this is NASDAQ right here. See what I mean about the spikiness? I'm trying to get to 740. Let me do it this way. I'm going to put 740 on this chart. And I'm going to put 740 on this chart. Here's 740 over here. And here's 630 over here. So let's put a line over here at 630. That can't be right. That doesn't look right. It looks like I have corrupt ES data here. I'm going to have to fix my database tonight. I know for a fact it wasn't like that. But, you know, that's what it's showing, so we'll go with that. All the movement between here and here this movement right here contained between these two vertical lines is the same time-wise as between these two lines. I know that's hard to believe, but that's what it's showing. Now you can see what I mean here by the spikiness of NASDAQ is that, you know, over here, you know, you came out of this box, you can make a case that this price action here, you can see with ES was not near as pronounced. See where it came down and bounced off the midband as this move over here on NASDAQ at 630, 635, which was right here. This move down here, timing-wise, is about the same as this move here on NASDAQ. See how much larger and more pronounced it is? Everybody see that? That arrow on the left, approximately, that little bit of movement down on ES correlates to this over here. Here you dropped, oh, I don't know, probably 80 ticks. Here maybe you dropped 10. And then this move up right here, I'm going to show you right here. So this move up off the midband right here to a double top, right, that we took. I took this. I took that with a 4 lot. Is this move up right here. Normally, NASDAQ leads ES. So when NASDAQ bounces and starts heading up, and you're looking to get long on ES, it's a pretty sure bet. Now, when I talk about spikiness here, I mean this right here, this type of price action on NASDAQ right here. See how you get this violent whipping up and down right in through here, right through here. See, it spikes up, comes down, violently puts in a swing, comes down, all of a sudden rips right back in your face, comes down, breaks. Which way is it going? Is it continue? See the striped shirt background, yellow bars, blue bars, red bars, spiking up and down all over the place, and then it finally breaks and rips. So, you know, you've heard me say this before, that the downside of trading NASDAQ is a lot of times you have to put up with a lot of pain. Pain means losses. Sometimes you're going to take some hits, but you got to catch the 50, 60, 100 tick runs to make it up. And sometimes you'll have to leverage up. You have to put, you know, you take a hit with a 1 or a 2 lot, you might have to go a 3 or 4 lot to catch the run to make it up. If you're going to look at NASDAQ, you know, just tuck it in the corner next to maybe an ES chart and just use it as a visual reference. You don't maybe want to trade it. I don't like the pain. I like ES. Good. And look, if you find this distracting over here because it's just whipping around all over the place and you just want to take your ES trades, well, then don't put this chart up at all. So some days NASDAQ is a lot calmer and the price patterns will look almost identical to ES. You know, same with gold. Here's gold. Gold was heading up early in the morning. Here's 630 over here. See, while markets are heading up, 630, 640. You know, gold should have been rightfully, and we said this in the room, gold should have been selling off in here. While this was going up on NASDAQ and ES, gold should have been doing that. And it wasn't. It was not correlated this morning. Yeah, if you're going to trade NASDAQ, you want to wait until it gets into a groove. Like over here, for instance, it was clearly selling off. You had this huge spike down, 80 ticks. You pull back, you could have caught one leg like that. Just try to nail one or two legs with a 1 or 2 lot and then be done with it. Otherwise, you're going to get all whipped up. Let's see. What here was another question from Rob. At the end, can you please show how to get the date to change bars to 2? Sure. And then we're going to wrap. Okay. All right. Let's come back over here. Right click. Data series. You have a yes. It shows a 4. You come in here and you put in a 2. That's it. Data series. From a 2, when it's a 4, it will say 4. When it's a 2, this will say 2. And then you click OK. Okay, I'm going to leave it a 4. All right, any final questions? Final questions on what we showed here today. I'm sorry I couldn't do more of the correlation stuff. You know what? Let's do that Saturday. Let's see how the markets do tomorrow. I'll look at the correlations between NASDAQ and ES. I'll put a gold together with it. And then Saturday morning at 9 o'clock, when I do that one, I will start off with the correlations. How does that sound? That sound better? Here it sort of got glommed into the tail end, and I didn't have a chance to really do it justice. But the takeaway was, these charts right here, ES and gold, should not look the same. And unfortunately, this morning they did, so they weren't correlated. And you had so much violent movement on NASDAQ. The correlations were there, but they're so much more pronounced over here with, shotgunning up and shotgunning down. And here it's still just very smooth and easy to trade. Long trade 1, long trade 2. We got bipped into a stop out quick here. We took a loss, and then we took the short right here. And that was it for ES. I mean, I showed on a 2 lot with those trades, including the lot, you could have made over $1,000 on ES, no problem. That's why I trade it. And I traded 4. Dave, look, there's a question on, last question, then we're going to wrap and render this puppy up. There was a time period, I'd say it was, I want to say it was maybe a couple, 3 years ago, where crude oil was very tightly correlated to the equities. So, you could look at crude and put it right next to ES chart, and they will almost look identical. But I'd say that over the past maybe year and a half, they've decoupled that, and crude is kind of on its own trajectory. It doesn't. I mean, occasionally there'll be correlation there when equities are going up. Crude will be going up, but I look at that more as just sort of an anomaly. You got a lot going on in the Middle East, right? You got a lot going on over there. You got a lot of conflict. Syria, Iran, Iraq. You've got Saudi Arabia, Aramco trying to go public. I've been talking about Aramco going public for years, trying to get a $2 trillion valuation. That might happen. Maybe it won't. You got ships blowing up over there, attacking each other. There's just a lot of conflict, and then of course you got the inventory levels like today, right? Inventories spike up. There's too much. Inventories spike down. So it doesn't tend to correlate as much to equity movements and gold. So the answer is no. It's a long-winded way of saying no. All right, that's a wrap.